Yes, good morning. This is Andrew from My Investor's Place. It's pretty early in the morning. It's around, well, a little after 5:30 before the day starts. What I'd like to talk about, well, first of all, I'll tell you about what My Investor Place is. My Investor Place is a social network site where investors can network, chat, discuss current events. I'd suggest you join. You'll learn some things, meet some people, network. What I want to do this morning is I want to talk about something that, well, actually over the weekend, it was really bothering me. I mean, with the $700 billion and the $400 billion, I mean, all these crazy numbers. I mean, what comes to mind is it crushed the dollar and increased the debt? And I asked in one of my earlier posts if the U.S. dollar has bottomed or if the U.S. dollar is going to crash. And what I find fascinating is the common logic. The U.S. dollar should have gotten crushed over the weekend when we were waking up early this morning. Again, I'm drinking the coffee, already drank the coffee, looked at the CME, Globex, and dollar was down. It was down 70, now it's down less than that. But interesting enough, the U.S. dollar is not clobbered. And really it comes to thought is that we're all in this together. Isn't Western Europe having the same issues as the U.S.? One can't miss the news and see that Russia closed their markets last week, even though they had the feel-good rally with almost 25% rebound, which is just mind-boggling. And what I assume is that the U.S. dollar's problem is everyone's problem. And it's clear the Fed is trying to restore confidence, Freudian slip, but it's not rocket science to realize that spending $700 billion on tainted, flavored mortgages and $400 billion on money markets will boost the national debt, and put us further into debt. It's print and tax time. And I mean, my whole life, I always believed in that the U.S. dollar was the bastion of security and the U.S. was the greatest country in the world. And maybe it still is, regardless of the fact of all the economic problems, but it's extremely unsettling that people, I'd say like myself, who've paid their bills, saved their money in U.S. dollars, and now stand the potential of losing purchasing parity due to the greed of Wall Street and the banks. I mean, where were the regulators restricting banks from lending to speculators who would buy a house with no money down and look to sell it to another investor as opposed to a homeowner? I mean, where's the logic? And that the regulators are stopping a free market and trying to stop short sellers. Okay, let's play devil's advocate. Okay, let's say the regulators missed it, which is 100% possible. But if someone wants to make a stupid loan, okay, great, that's their issue. Be responsible for it. But why should we, the taxpayer, the hardworking saver, have to bail out the banks for their greed? Last week, the dollar fell against 14 of the world's most traded currencies on September 19th when the Fed unveiled their restructuring plan. You had the feel-good rally of the S&P 500, up about 4%. And that really, to me, that's all it really was a feel-good rally, confidence building, and then the question is, for who? I feel good once we'll have a strong nation again and a responsible government who supports the U.S. dollar instead of a bailout for the most stupid bankers of the century, or probably all time. I mean, how many of you realize that this unprecedented government intrusion into the markets will increase the U.S. debt by almost 6.5% to almost $11 trillion? I mean, it's mind-boggling. And another nice thought, in order to protect our money and hoping to get a return of our money as opposed to return on our money, that, the suggestion has been putting money into U.S. Short-term government interest rates vehicles, but guess what? We're losing money to inflation and taxes. The Fed's plan, may end the dollar rally that began in June and drove the U.S. currency up about 10% versus the euro, 2% versus the yen, and about 13%, versus the Brazilian real. Maybe, maybe not. I really don't have an idea. No one does. We have to react. But just a fun thought, it might be an interesting, what I've looked into, is you look at the Brazilian real, has a higher interest rate, and they have a very self-sufficient economy, and especially I love what they do with, they're not importing oil and crude. I invite you to come to My Investor's Place. My Investor Place is a social network site for investors where we discuss ideas. You can post your blog, get more exposure. This is Andrew from My Investor's Place. I greatly appreciate your time, and good luck. Thank you.